Yes, good afternoon or good morning, Philippines. So, Jonathan Ruiz, your accounting coach or survival tips. So, this time I would like to say thank you so much for tuning in and for subscribing in my YouTube channel. If you haven't done, please do subscribe. Click the subscribe button. And if you have families and friends that you think that this lesson will help them, please do share it with them. I'm really thankful and grateful for those students that asking questions, making comments. I'm reading all of them, and please do share it with your friends. Okay, so you will be or they will be directly updated through my YouTube channel instead of me keep posting it to many accounting forums. I think in the future I will not do it. Okay, I will just upload it directly on my YouTube channel. Okay, so again, so today is another lesson. So let's start. Okay, so what I'm going to do today actually is I'm going to discuss accounting for bad debts. In the previous lesson is accounts receivable. So today I'm going to discuss what is bad debts. No, so we will look for uh, the definition. Okay, so I will make it in a layman's term. Of course, I'm going to give you methods for accounting bad debts. So there are two methods, and then I'm going to give an illustration. Okay, so moving on. So what is bad debts? Okay, so remember, pag nakikipag-deal ka na sa mga customers mo, usually they will pay cash, correct? So if not cash, then you do also credit. So that means you do sales on credit. So there is a possibility actually of encouraging the customers to give them credit days. So they will not pay you right away because probably the possibility is they will sell also the items or their money is coming in after 30 days. So this will give them time, no, para makapag-provide ng pera to pay you. So that's one reason why we do sales on credit. So, but there is a possibility of customers not going to pay. So, marami kang customers, there is a possibility that they will not pay you. So, there is a risk. The risk that some customers will not pay their accounts. And when an account becomes uncollectible, the entity has sustained a bad debt loss. So, kaya nagkakaroon ng bad debts. Kasi the possibility is ang customers is nag-went bankrupt, okay? Hindi nakakolekta sa kanyang sariling customer. So, maraming mga possibilities. So, there is a possible risk. That's the reason we do allowance for bad debts. Or that's one reason why we need to recognize bad debts. Okay? So hindi lang laging makukolekta ang sales. So ngayon ang possibility is talaga magkakaroon ka ng bad debts expense. Okay? So two methods for accounting bad debts. We have allowance method. Actually, this one requires recognition of bad debt loss if the accounts are doubtful in collection. Okay, but this is in accordance with the GAAP, the generally accepted accounting principles. That means it is directly related, no? Sa sales mo, so there is a matching principle. And then we will be able to measure properly the net realizable value of accounts receivable. What about direct write-off method? This is for income tax purposes only, or you can use it for Bureau of Internal Revenue filing of tax. Okay, but this is not allowed in GAAP. Okay, so usually company mostly use the allowance method. Now, I'm going to give you an illustration for allowance method and direct write-off method and check what is the difference. Okay, so here is the illustration for allowance method. Let's say accounts of 20,000 are considered doubtful of collection. So what will be the entry? So you have debit, doubtful accounts, 20,000, credit, allowance for doubtful accounts, 20,000. Now, what if the accounts are subsequently discovered to be worthless or uncollectible? So napatunayan mo na hindi ka na talaga makakakolekta sa customer mo. Okay? Kasi nakasampung follow-up ka na, wala pa ring response. Hindi mo na makita kung nasaan ang address niya, kung even ang mobile niya is subscriber cannot be reached. So then you need to do is allowance for doubtful accounts, debit, 20,000, and then credit accounts receivable, 20,000. So you already took it out from your accounts receivable. Now, years pass, what happened is the same accounts that previously written off are unexpectedly recovered or collected. Biglang nagpakita ang iyong customer at bigla mong nakolekta ang receivable mo sa kanya. So what will be the entry? So ibalik ang accounts receivable, debit 20,000, credit, allowance for doubtful accounts 20,000. Actually, there is another entry, of course, because you received the cash, debit 20,000, accounts receivable, credit 20,000. So that is the allowance method. Now, let's go to direct write-off method. Okay? Actually, this approach is oftenly used by small businesses because this is simple to apply. Of course, this violates the matching principle because the bad debt loss is often recognized in accounting period than in the period in which the sales revenue was recognized. Okay, so the entry, if you will make accounts of 20,000 are considered doubtful of collection, then no entry under the direct write-off method. So dito pa lang, meron ka ng difference compared to the allowance method. Wala siyang journal entry. Next, the accounts proved to be worthless or uncollectible. So this means you need to record debit bad debts 20,000, credit accounts receivable 20,000. Now, let's say, again, the customer appeared and he wants to pay. So the same accounts that previously written off are unexpectedly recovered or collected. Same entry lang. Accounts receivable debit, 20,000. Credit bad debts, 20,000. Then, you have debit, cash, 20,000. Then, credit accounts receivable, 20,000. So, yan po yung direct write-off method. If you don't understand, then you can post or you can rewind the video and play it again. I have special notes. Okay, so if the recovery is subsequent to the year of write-off and the direct write-off method is used, the recovery may simply be credited to other income. Now, let's say doubtful accounts in the income statement. What if the granting of credit and collection of accounts under the charge of the sales manager? Doubtful accounts shall be considered as distribution cost. Like for example, kasi ang nagbebenta is yung sales manager, pagkatapos nagbigay siya ng credit, pagkatapos hindi naman pala makukolekta, so i-charge back sa kanya. So that will be a distribution cost. Okay? So if the granting of credit, collection of accounts under the charge of an officer other than sales manager, doubtful accounts shall be considered as administrative expense. What if the AR collector hindi niya nakolekta, pagkatapos ang rules ng company is sa kanya naman i-charge, so that will be an administrative expenses. Well, what if there is no policy like that or contrary statement? So So that full account shall be considered as administrative expenses. So that's it for today. So again, I discussed the definition of bad debts. I give you some reasons why bad debts is necessary to recognize. And then I discussed the methods for accounting bad debts. I give you the illustration of journal entries for allowance method and direct write-off method. So again, maraming salamat for subscribing. I hope you like the lessons. So for the next topic, I will discuss inventory. Okay? So please, if you want also to have a daily multiple choice questions practice, you can go to my FB page at CPA Dreams, and please do like and share. Again, if you haven't subscribed yet to this YouTube channel, please do so. It's just a click of subscribe button below. Thank you so much, and hope to see you again on my next session.